Good afternoon. This is Rob Sin at CEO Technician on Twitter, at Goldfinger on CEO.ca. It's about 5:40 on the East Coast on Sunday, April 30th, 2023. And this video is going to be focused on uranium, the Cameco earnings report that came out last week, why I think that was such an important report, a lot of good information contained inside of it, and why this is an important moment for the uranium sector and nuclear energy more broadly. If you find value in this video, if you enjoy it, please hit the like button right under the video, hit subscribe to get more videos like this from me. I've been covering the uranium sector and the nuclear energy renaissance for much of the last year. This is my latest installment in the series. So this slide from Cameco pretty much spells it out. I mean, uncovered uranium requirements for utilities through 2040 are estimated to be between 2.2 and 2.3 billion pounds. This is where we are today, 2023. So the utilities globally, this is the gray is the US, non-US is blue. Utilities globally have mounting requirements in terms of nuclear fuel and uranium that they need to source over the coming decade and throughout the next decade. When it says it's uncovered, it's not contracted. That supply is not under contract right now, and how they're going to get it is still in question. So we are just at the cusp of this mountain of supply that's going to have to be found to meet the requirements for nuclear energy to fuel, the reactors globally. And you can see the base case is bullish by itself. There's not enough primary and secondary supply to meet the supply requirements starting in the next couple of years and only growing larger over the next decade. Well, in the bullish case, the high case, that's a very large gap that is widening well beyond 2030, and creates a situation where companies like Cameco are it's like a perfect storm for them. It's a perfect bull market storm for the uranium sector, and more specifically for a vertically integrated mining and nuclear fuel producer like Cameco. So let's go to what happened last week. So Cameco was up nearly 8% on the week, up 3.3% on Friday. There's a lot of things I like in this CCJ chart, not the least of which is the fact that the volume is accelerating as the price turns up. The stock was up every day last week, up nearly 8% for the week overall. And we're nowhere near overbought. So the oscillators, the relative strength index, are still characteristic of a nascent bull market trend. So we're just at the beginning of the uptrend. We're not near the end of it. If we pull it out to a weekly chart, go 5 years, you can see how CCJ has spent much of the last year consolidating within a range. It's a range-bound consolidation that is coming after a 2-year bull market uptrend that basically saw the stock rise nearly 500% from low to high. So this is a healthy consolidation within the context of a major bull market uptrend in Cameco shares. The upper end of the recent range is about $30 a share. So clearly that's also going to be basically our breakout level that we need to see a weekly close above $30 to get confirmation that this recent range is resolving higher. Big support down around Well, the first support level is down around 24. The second one is down around 22. If we go out to a monthly chart and zoom it out even more to a 15-year, you can see this is a high and tight consolidation. This is like a bull pennant consolidation on the big picture monthly chart. And I love where the relative strength index is just under 60. So one of the key characteristics of a bull market chart is you'll see price have this big up move. The stock will get overbought. The RSI will reach 75 or 80 or even 85. But then it will consolidate for an extended period of time. And the RSI will pull back, usually under 60, sometimes even as low as 50. And while price is largely going sideways. So basically, the market is correcting itself mostly through time and not price. That's a key characteristic of a long-term bull market environment in any chart, in any market. So Cameco is exhibiting that. It is correcting largely through time and not price. I could talk a little bit about the URA, but let's talk about the fundamentals. So why is this such an important moment for nuclear energy and for the uranium mining sector more specifically? So the fundamental thesis is laid out here in these bullet points. We have India doubling down on their commitment to nuclear. In fact, if we go to this Cameco presentation, we can see that India has 8 nuclear reactors under construction. Currently, China has 18. And the state-run, the big energy company in India wants to install up to 30 gigawatts of nuclear capacity by 2040. That's a big deal. U.S. passed the Inflation Reduction Act, the IRA, in 2022, and that reinforced that nuclear power has an important role in the clean energy transition. Moreover, Canada, the Prime Minister of Canada last week, pounding the table that nuclear energy is a big part of Canada's clean energy future. Canada is committed to nuclear energy and small modular reactors, the SMRs, like the Darlington plant in Ontario. So this is a $1 billion investment by the Canadian Infrastructure Bank in the Darlington plant. So Canada is moving forward with SMRs. That's a big deal. Japanese are restarting some of their nuclear power plants, and government and public support is growing for nuclear energy in Japan. South Korea also set to make a U-turn on nuclear energy, with the president of South Korea saying that the country aims for nuclear to provide a minimum of 30% of its electricity by 2030. So all of this generates a compelling set of fundamentals with only 140 million pounds of primary mine supply versus 190 million pounds of demand. So that's a big gap that is incredibly bullish. And this is the key point. So yes, we understand the uranium market is undersupplied, and that deficit, that growing gap in supply, is only set to get larger, as evidenced by this chart from Haywood. But why is it sort of an urgent need right now? Well, the utility contracting cycle is underway. And if we read Cameco's latest quarterly report, they gave a lot of nice, juicy tidbits in here, basically saying that there is increased competition among the utilities to secure long-term contracts for uranium products and services. And Cameco in particular, and Canada in particular, is increasingly attractive due to the fact that it's a stable jurisdiction with good ESG marks, essentially strong environmental, social, and governance performance. So Cameco definitely singing the ESG tune in this quarterly report. But the fact is, utilities around the globe need to gain confidence in their future supply of fuel. And the contracting cycle is underway. And the fundamentals are pointing towards a higher spot price. So, more likely than not, there's going to be a bit of a stampede that's going to unfold here in the second half of 2023 as these utilities compete with one another to lock in the best prices. And I have a feeling those prices are not going to be $50 a pound. I think we're going to see a lot of long-term contracts signed at 70, 75, or $80 a pound, potentially even higher than that. So we know the security of supply issues are big. We know about Russia. We know about Kazakhstan. We know there's this bifurcation of East versus West. China is going to secure its own supply. A lot of that will probably be from Asia and Africa. China's the biggest player. It's not even close. They're building 18 right now, but this is set to become much larger over the next 15 years as China has plans to build 150 new reactors in the next 15 years. So just from China alone, that's more nuclear power set to come online than the rest of the world has built combined in the last 35 years. So China is really the big player here. And we already know about the split between the East and the West, the tensions, between the US, Canada, and China. So simply put, if we look at this map again, where is the US? Where are other Latin American countries and European countries going to source their fuel from? Obvious answer is Canada. And actually, the question is, can Canada source all that's needed? Okay, that's a bigger question. And the answer to that might be no. And that is also why this setup is so bullish for the uranium sector and for a lot of the juniors in the uranium sector. Another thing that's happening is new financial entities coming into the market, like the Sprott Physical Trust, buying up physical U3O8 in the spot market. The spot market is very tight right now. And yes, the price has been consolidating just above $50 a pound. But I have a feeling that with conversion and enrichment prices shooting up in the last year, I think U3O8 spot prices are next. And if we listen to the CEO of Cameco himself, he's saying we have the best fundamentals we have ever seen for the nuclear fuel market. That's a big statement coming from somebody who has a lot of visibility into this sector. So yeah, if we sum it all up, this is an increasingly bullish environment for nuclear energy and the uranium sector more specifically. NextGen has probably the premier uranium asset that is not held by a major globally. The stock chart has been in a wandering, aimless range for much of the last year. Well, I feel like we just retested the bottom end of that range. And one could even call this a failed breakdown, this little dip under the 350 level on the NXE chart. And price has rebounded very aggressively since that test at the beginning of last week. I like this setup here. From failed moves come fast moves. We just tested the bottom end of this range. It held again. I think that this is set up for further upside over the coming weeks in NXE NextGen. And then another chart that stands out to me, this is a company I've talked about several times in the last 6 months, Sky Harbor Resources. Look at the volume, over 2 million shares traded on Friday. The stock was up more than 10%. And this has also had a very nice rebound in the last couple of weeks, just like NextGen. Something is going on there that drove over 2 million shares in trading volume for Sky Harbor on Friday. I wonder what it could be. But Sky Harbor, NextGen, Cameco, all in the right place in the Athabasca Basin of Canada. So the best place for uranium exploration and arguably the best country for nuclear energy and uranium mining, Canada. Thanks a lot for your time and your investment in watching this video. And I hope your investment choices prove to be fruitful as well. Thank you.